Hello, good evening and welcome to Business Live. Coming up in this bulletin, Bank of Ghana moves to begin forex sales under the domestic gold purchase program this month.
So, colleagues, as we celebrate these gains, let me stress that the task of consolidating stability is a shared one. Sustaining a stable exchange rate or deepening credit to productive sectors and expanding exports.
How will this strengthen market transparency and enhance price discovery? We shall be discussing that. Also in this bulletin, stock of non-performing loans increases marginally to hit almost 21 billion cedis for first half year, a move that could affect push for lower interest rates. Plus, Ghana Statistical Service to begin the computation of regional gross domestic product figures after completion of the process of rebasing in 2026.
Embarking on a GDP rebasing exercise, and we want to believe that when we do complete that exercise, it will provide us the opportunity to possibly report GDP at the regional level. But all of these require money to execute.
Details of these and more for you this day. Thanks so much for your time. I am Pius Kojobaka, and we want to start off from the Bank of Ghana because they have announced plans to commence forex exchange intermediation under its domestic gold purchase program this month. The central bank intends to sell up to $1.15 billion in forex for the month as part of efforts to strengthen market transparency and enhance price discovery. Here's more.
To the Bank of Ghana governor, the sales will be conducted on a spot basis through twice weekly, price competitive auctions open to all licensed banks. The Bank of Ghana emphasized that there will be no earmarking or special conditions attached to allocations, ensuring a level playing field and transparent access for all market participants.
So, colleagues, as we celebrate these gains, let me stress that the task of consolidating stability is a shared one. Sustaining a stable exchange rate or deepening credit to productive sectors and expanding exports. These require close collaboration between the Bank of Ghana and the banking industry.
At the same event, the Bank of Ghana governor also called on commercial banks to strictly adhere to domestic regulatory provisions to help strengthen the country's financial system and sustain economic stability.
And in the same spirit, I want to urge banks to adhere to domestic regulatory provisions. I want to emphasize that please adhere to our regulatory provisions. Now, a number of areas to emphasize: the use of local insurance companies for import coverage. That's one issue that has come up strongly to help reduce foreign exchange leakages and build local liquidity. We also expect banks to take active steps toward public listing.
The central bank reiterated its call for banks to continue supporting export-oriented financial products, SMEs, and agribusinesses as part of efforts to promote sustainable economic growth.
Governor Dr. Johnson Isiama also called on commercial banks to take bold steps in reducing their lending rates to support economic recovery and private sector growth.
On the monetary policy decision and the outlook itself, on the back of this progress and in order to support the disinflation process while nurturing growth, the MPC voted to lower the policy rate by 350 basis points to 21.5%. This is the third rate cut in 2025, and this reflects confidence that inflation will remain within the medium-term target band of 8 plus and minus 2% by the end of the fourth quarter. We are mindful, however, of potential risks going forward, and you're talking about risks including global oil price volatility. There are risks to do with possible tariff adjustments, and then there are other risks that we have to consider, such as any uptick in the rate of in the movements of the city. But we stand ready to act decisively, whatever happens, to safeguard stability. The easing in policy rates has already started to transmit through the financial system, and we are seeing signs of that. Treasury bill rates have declined from 13.4% in July to 10.3% in August. And average lending rates are down from 26.6% to 24.2%. We expect further improvement as banks realign their pricing models to reflect the easing stance.
And we know total stock of non-performing loans saw a marginal increase in the first half of the year, reaching new highs. Now, according to fresh data from the Bank of Ghana, the figure rose to nearly 21 billion cedis as of end of June. Details in this report.
The revelation by the Bank of Ghana showed that more of the commercial banks were worried that the majority of the loans that were given out are not being paid back on time. The new stock of non-performing loans represents almost 50% year-on-year growth. So how are these loans distributed? Well, the data showed that the private sector accounted for 95% of the loans that the commercial banks were worried that are not being paid back on time in terms of the agreed schedule for payments by these companies out there. Firms in the commerce, finance, as well as agriculture, forestry and fisheries sector recorded an increase in their NPLs ratio. But for a lot of people, the development raises a lot of questions, especially about the fact that who should be blamed for this marginal spike. This is because most of these businesses say they took the loans to execute contracts on behalf of the government of Ghana. Therefore, if these debts are not settled, then they cannot move to honor the obligations to the commercial banks. Others are also worried about the impact of this development in reducing lending rates in the country for this year. This is because there has always been an element of the non-performing loans factored in the pricing of new loans.
Let's analyze these financial issues further. Joining us via Zoom is the head of finance at Merban Capital, Nelson Kujo Kwagbaji. Thank you so much, sir, for making time to join the discussion here on Business Live. Let's start the conversation with moves by the Bank of Ghana to commence FX intermediation under its domestic gold purchase program this month, with plans to basically sell up to 1.15 billion cedis for the month. Why is the Bank of Ghana trying to do that?
Well, thank you very much, and good afternoon for having me. Well, I think the objective of every central bank is to maintain two things: one, price stability, and two, currency stability. And we have seen right from the beginning of the year that the Bank of Ghana has brought on board plethora of directives regarding what they intend to do as far as currency stability is concerned. If you recall, recently the Bank of Ghana slashed 5% on forex withdrawal from the counter. I mean, when the banks go to Bank of Ghana to withdraw, Bank of Ghana will charge them 5%. And the banks are also charging about 7.5% to 10% on any withdrawal from their counters. We have also seen that Bank of Ghana has also issued a directive regarding the utilization report. And so when you go to the bank to withdraw any forex, you have to tell the banks what you intend to use the money for. So all these are policies that Bank of Ghana has brought on board in recent times in order to maintain the stability of the Ghanaian cedi. Now, regarding the $1.1 billion, dollars domestic gold purchase program, is just one of those monetary policy tools that the Bank of Ghana intend to use in order to maintain currency stability. In fact, as at the month of April, May, the cedi has gained so much weight to the tune of more than 51%. But as it stands now, the cedi has performed to the tune of 21%. So it means that for some time now, the cedi has also depreciated to some extent. So I believe it's one of those policies that Bank of Ghana intend to use to maintain the stability of the Ghanaian cedi.
And talking about the Bank of Ghana, they hope to maintain or strengthen market transparency and, of course, enhance price discovery. To what extent do you think this will ensure a flexible FX market?
Well, I mean, Bank of Ghana do intervene in markets. I mean, even though we operate a system where it is demand and supply that clearly determines the price of a commodity, Bank of Ghana do intervene because they have the forex and they have to release the forex to the banks for onward transmission to those who are into international business transactions. And to the extent that they are committed to releasing such an amount of money into the interbank market, we believe that will go a long way to stabilize or help in the stabilization process of the Ghanaian cedi.
And Mr. Kwagwaji, we are learning that non-performing loans, for example, increased marginally the first half of the year, reaching new highs. How could this affect the push for lower interest rates like we are envisaging?
Good. That's a very interesting one. The internationally accepted standard is 10%. And so when you have a banking system or banking industry where your non-performing loans are more than 10%, what it means is that that particular banking sector or the banking industry is actually in distress, because you cannot have a banking sector where about 21% of your loans are bad, which means that the banks are not making any gains. And so I believe that the banks have to relook at their credit risk concentration models and design policies and credit, procedures that can mitigate this. In fact, if you look at a typical banks, you realize that their concentration in loans are even reducing because of the increasing nature of the NPLs. The banks are tilting their attention more towards government securities because, I mean, it doesn't make sense to give loans to somebody who will not pay the loan, and then you now spend money chasing the person to recover the money. And so the banks would prefer to sit in their office, buy government securities, and then try to, as much as possible, reduce their non-performing loans. But the fact of the matter is that will also not help the economy to grow, because businesses need capital to grow. And so to the extent that the non-performing loans are going high, I believe the banks may rather shy away from borrowing to high-risk SMEs, and that may not augur well for the growth of our economy.
And interestingly, this is coming at a time the governor is appealing to banks to reduce their lending rates to support economic recovery and the private sector growth, like you mentioned. And how possible is that?
Well, that is a very difficult one, because if you have a non-performing loans of 21%, and you still want to give loans to the private sector, most especially the SMEs, the challenge we have in our country has to do with cost of capital. Now, do you think it would be prudent to give loans to somebody at 25% and the person will end up paying? What kind of business would the person do in a year to pay 25% interest? And so if interest rates should come down to, let's say, single digits, I believe the businesses in Ghana could go to the banks, borrow and pay. And that will eventually lead to the reduction of the non-performing loans of the bank. But to the extent that the borrowing rates or the cost of borrowing is very high, businesses will continue to default, most especially businesses that are into government contracts. Because if the government doesn't pay them, they will also not go to the banks to pay. So I believe that when the rates are down, say single digits, businesses can go and borrow. They can operate with a single digit lending rate and pay back the loans to the banks, and that will eventually lead to the reduction of the non-performing loans. However, if the rate continues to be high, the way they are now, people will borrow money from the banks, but they will end up not paying, and that will lead to increment in the non-performing loans.
And could it also be as the reason why the banks are reluctant to give credit to the private sector, despite the consistent drop in the policy rates and, of course, interest rates in general?
I mean, of course, if you are lending money to a particular sector or a particular business or a particular individual, and the individual or business is not paying back, you will not be motivated to pay. Don't forget that the banks, they are also in business. They mobilize deposit from customers in form of savings account, current account, fixed deposit, and all forms of deposit. And they intend give that money as loans to, the economic agent having deficit of that capital. And so when those businesses are not paying, the banks may not be able to also honor their obligation towards their depositors. And that may pose a problem to the entire financial system. And so to the extent that the non-performing loans of banks are going up, they may shy away from lending, most especially to SMEs, because the banks consider SMEs to be more risky as far as their lending obligations are concerned.
Regardless of the issues highlighted in the financial sector, the regulator believes the banking sector remains sound and resilient. Do you agree?
Well, yes, I will agree, because the capital adequacy ratio of the banks is around 18%, and is one of the key indicators of the soundness of a banking sector. And to the extent that this particular ratio is around 18%, I believe the financial sector, the banking sector, is sound. However, there are still some underlying risks.
And do you get the sense that the Bank of Ghana is working towards that to avert any possible impact it may have on the financial sector?
Well, every now and then, the Bank of Ghana issues directives regarding the banking sector. I mean, recently, they actually changed one of their policies that has to do with the deposit that the banks have with the cash reserve ratio. The cash reserve ratio was recently changed, and every now and then, Bank of Ghana actually brings on board directives in order to protect the soundness and the integrity of the financial system. In fact, from the experience that we had regarding the domestic exchange program, you realize that the banks were so much affected. In fact, some of them, over the years, the surpluses that they have made have been, derailed by the losses that they have made as a result of the domestic exchange program. So I believe every now and then, Bank of Ghana brings on board directive that is intended to protect the sanctity, the integrity, and the soundness of the banking sector. And so we expect more of this going forward.
Nelson Kwagbaji, Head of Finance, Merban Capital, thank you so much for your time here on Business Live. Grateful speaking to us. This is still Business Live. We have more stories for you shortly. Hello again, welcome back to Business Live. To one of our lead stories, the Ghana Statistical Service has revealed that it will begin the production of regional and district economic growth figures in 2026. This is expected to commence after the completion of the rebasing, which typically recalibrates and incorporates new economic structures and data for efficient modeling. More from the Africa Business Conversation, the thought leadership series organized by AB and David.
At the end of the Africa Business Conversation, a thought leadership series organized by indigenous law firm AB and David, businesses and other stakeholders charged the Ghana Statistical Service, GSS, to provide sector-specific data. According to them, this will enable diverse businesses to make better use of available data. The Africa Business Conversation focused on how businesses can collaborate effectively with the Ghana Statistical Service to ensure data-backed decisions. Senior partner at AB and David, David Ofosu-Dorte, urged businesses to take full advantage of the data provided by the service.
We must give credit to the GSS. There's a lot more they publish which is not highlighted, which businesses ought to pay attention to. So there were three things in this segment. One is the data that they publish just for World Bank and IMF. The other one is that are there data that they have that businesses should be paying attention to? And the third one was whether there are areas we can collaborate. So if you look at the second and the third segment of this, that was really the focus. And it turns out that they have quite a lot of data that either businesses are not aware of, that they can use in their corporate strategy, or in their presentation, they don't highlight it enough.
Panelist and professor at the University of Ghana Business School, Professor Godfred Bokpin, encouraged university lecturers to keep abreast of current industry trends and data to better inform students.
I think that in this country, it's not anybody at all who should qualify to be a lecturer. There has to be a strategy, okay, which will also inform who and who will recruit as front line in the classroom and the rest of them. And then we must be intentional also about what is given out there. Because for me, the more I engage, in fact, there were certain positions that I held a few years ago and now I'm revising. Because the more I interact and I come here and I listen to people and the rest of them, it makes me humble.
Addressing concerns about the unavailability of sector-specific and regional data, government statistician Dr. Alhassan Idrisu stated that the service is working on reforms to enhance Ghana's data systems.
Currently, the GDP we produce is at the national level, but we are currently embarking on a GDP rebasing exercise. And we want to believe that when we do complete that exercise, it will provide us the opportunity to possibly report GDP at the regional level. But all of these require money to execute. Rebasing we've started and we expect to complete it by next year.
Much like AB and David's Crystal Ball series, the Africa Business Conversation seeks to gather business leaders, strategists, and policymakers to discuss key issues affecting businesses and the wider economy.
Away from that, the chairman of the Chamber of Oil Marketing Companies, COMAC, Gabriel Kumi, has charged the National Petroleum Authority to tighten its regulations on discrepancies affecting the growth of the downstream petroleum sector. According to Mr. Kumi, misreporting of data on petroleum lifting by some players has become a big threat to the sector and must be checked immediately. At a news conference in Accra, he called on the NPA to consolidate its activities by ensuring that companies involved in such activities are brought to book.
We will call on our regulator, the National Petroleum Authority. They are clothed with the powers. They have all the machinery. They have everything to bring this problem to a definite end. NPA tracks every truck that loads petroleum products in Ghana. So if we are to go into the tracking system, I don't think we can see that volume going to Upper West and Upper East. We trust in the ability of my brother Eduji. He has done so well so far, but he cannot be described by industry as a good chief executive if he does not deal with the problems in this report. Because this problem adversely affect about 95% of our members. So if we are not able to deal with a problem that affects 95% of our members, we cannot sit here and praise the regulator. And I know they have the capability, they have the capacity. What is left is the willingness for them to deal with this issue.
And you can always get stories when you log on to myjoyonline.com/business. And there you go with some great business stories on that portal for you. Let's get some quick read. Cut lending rates further to support economic growth. Bank of Ghana appeals to banks. And also on that portal, BoG begins FX sales under domestic gold purchase program in October. And we brought you that story here on Business Live. We have more stories when you log on to myjoyonline.com/business. Do visit the portal and get yourselves updated. I am Pius Kojo Baka, always a delight serving you. That's it for Business Live.